Welcome back to The Deep Dive. We're your go-to for digging into what really matters from earnings calls. Today, we're taking a closer look at Xunlei Limited, that's XNET on the ticker, and their recent Q2 2025 earnings call. And this wasn't just, another quarter. It felt pretty packed with some significant strategic shifts.
Oh, absolutely. This quarter was genuinely pivotal for Xunlei. We saw this broad-based acceleration in their top-line growth and some really key strategic moves that honestly seem to be reshaping where the company's headed.
Right. So we're going to break down how they pull off these strong results. What does it all mean for their future? And maybe find those aha moments for you, our listeners.
Exactly. We'll look at the key figures, what's driving the performance, and importantly, what management is signaling for the next few quarters.
Okay, let's kick things off then with the headline numbers for Q2 2025. Xunlei really delivered a robust quarter here. They reported total revenues of $104.0 million. That's a substantial year-over-year increase, 30.6%. Quite a jump.
It really is. And then on the profitability side, things get interesting because you've got two quite different pictures. Their non-GAAP diluted earnings per ADS came in at 0 and 13 cents. That gives you a feel for the core operational performance, stripping out, one-offs.
Okay, 13 cents non-GAAP.
But then the GAAP diluted earnings per ADS, which includes everything, hit an eye-popping $11.48.
Wow, $11.48. That's a massive difference.
Huge difference. And it's mostly down to a very significant non-cash gain, which we'll definitely dig into. The market certainly noticed these figures react pretty positively. It definitely caught attention.
Okay, yeah, we need to unpack that GAAP number. But first, that growth, 30.6% revenue increase. It wasn't just one area driving it, was it? It seems like all the core segments were expanding.
That's right. It was broad-based, which is always a good sign. Tells a story of maybe diversification paying off.
So first up, the subscription business. Pulled in $36.4 million in revenue. That's a solid 10.5% increase year over year.
Yep, steady growth there. And they hit a new record 6.4 million subscribers.
And importantly, the mix shifted too, right? More premium subscribers.
Exactly. The percentage of users on their premium subscription tier rose to 81%. That's up from about 77% a year ago, which, signals strong user affirmation. People are willing to pay for the premium feature.
That's your foundational business doing well. But the real standout seems to have been live streaming and other services.
Oh, absolutely. That segment just exploded, up an impressive 85.5% year over year, hitting $37.6 million.
85%. What fueled that kind of surge?
Well, it was mainly two things. First, the expansion of their overseas audio live streaming business continued its strong run. And second, the really significant contribution from their recent acquisition, Hoopoo.
Yes, Hoopoo. They just closed that, didn't they? How much impact did Hoopoo have right out of the gate?
Well, just looking at June, which was the first month Hoopoo's results were consolidated, it contributed about $3.2 million to Xunlei's total revenues.
Okay, so a decent chunk, but not the whole 85% chunk.
Not at all. And here's the really interesting part. Even if you strip out Hoopoo's contribution for that month, the rest of that segment, mainly the overseas live streaming, still grew by a remarkable 80.3%.
Wow, so strong organic growth plus the acquisition boost.
Precisely. It shows really strong underlying momentum in that live streaming business itself. This isn't just buying growth, it's accelerating existing growth and adding a new significant piece with Hoopoo. It feels like a strategic pivot into a broader content ecosystem.
Yeah, reshaping things beyond just the traditional accelerator business. Makes sense. And what about the third leg? Cloud computing?
Cloud computing also saw healthy growth. It was up 13.6% to $30.2 million. Management said this was partly a recovery from some previous setbacks, but also rising demand from major clients. They're focusing on cost-effective, scalable solutions there.
So subscription steady, cloud healthy, live streaming booming. Multiple engines are definitely firing.
Absolutely. Now, if we shift gears slightly to profitability, gross profit was $51.2 million. That's up almost 26% year over year.
Good growth there, too, but the margin dipped slightly.
It did. The gross margin stepped down a bit to 49.3% from 51.1% last year. Management explained this wasn't really about costs running away, but more a reflection of the changing business mix. Live streaming has a different margin profile and also increased investment. They're spending to grow.
Right. Investing in Hoopoo integration, overseas expansion, that makes sense. It's a cost of growth.
Exactly. An important nuance for you to consider, it's strategic spending, not necessarily a sign of worsening cost control.
Okay, let's circle back to that massive GAAP EPS figure. the $11.48. You said a big non-cash gain.
Yes, the lion's share of that comes from an approximate $720 million unrealized pre-tax capital gain.
$720 million? From what?
It came from their investment in a company called Arashi Vision Inc. You probably know them better as Insta360.
Ah, Insta360, the camera company. They IPO'd recently.
They did. They completed their IPO on the STAR Market, that's Shanghai's tech board, back in June. So Xunlei held a stake, and the IPO meant they had to mark that investment up to its market value.
Got it. So it's a paper gain for now, not actual cash flowing in from selling shares.
Precisely. It's non-cash, doesn't represent immediate earnings power you can, bank. But management views the financial flexibility gained from this as really significant. They see it as a solid foundation for boosting operational efficiency, investing in new tech, maybe expanding into other high-growth areas.
So it strengthens the balance sheet considerably, gives them options, maybe for M&A or R&D.
Exactly. Think of it as a strategic war chest. In the current climate for Chinese tech, having that kind of balance sheet strength is a real asset. It also, frankly, highlights some pretty astute strategic investment decisions on their part over the years.
Definitely speaks to their ability to spot potential. Okay, so looking forward, what's the guidance?
They gave optimistic guidance for Q3 2025. They're expecting total revenues between $116 million and $124 million.
$116 to $124 million. What does that imply sequentially?
Well, the midpoint of that range, let's call it $120 million, implies a strong sequential increase, about 15.4% quarter over quarter.
Wow, so they expect the momentum to continue, even accelerate sequentially. That shows confidence.
It certainly does. Management seems pretty upbeat about the near-term trajectory.
Are there any sort of potential headwinds or risks that could temper that optimism? Anything they mentioned?
That's a fair question. They didn't dwell on headwinds, but you could always point to macro factors like, advertising spend in China impacting Hoopoo or maybe intensified competition in cloud. Standard risks, really. But based on Q2 and the Q3 guide, they seem to feel their diversified engines offer some resilience.
Right. So connecting this back to the bigger picture, Q2 results, Q3 guidance, it paints a picture of a company hitting its stride.
I think so. It looks like successful execution of a multi-pronged growth strategy. The Hoopoo acquisition and its early integration seem to be working, transforming live streaming into a major growth engine.
And diversifying away from just the accelerator business.
Exactly. And then that Arashi Vision Insta360 gain, while non-cash, it validates their investment strategy and gives them that financial firepower.
It really does showcase that ability to identify and capitalize on these high potential ventures. Seems like smart capital allocation.
It does, which brings up an important point. How does Xunlei stack up against its peers right now?
Yeah, good question. How are they doing relative to the broader China internet space?
Well, they've actually materially outperformed. If you look at the KWEB ETF as a proxy for China internet tiers, Xunlei's performance has been significantly better across different timeframes.
Really? By how much?
Okay, get this. Over the past month, Xunlei's total return was nearly plus 43%. KWEB was just under plus 4%.
Wow, 43 versus 4. Huge difference.
Over the past 3 months, Xunlei plus 33.7%. KWA plus 9.3%. And over the last year, Xunlei delivered an impressive plus 297.8% return.
Almost 300% compared to KWA.
KWB was up about 37% over the same year. Still good, but massively outperformed by Xunlei.
So this isn't just riding a general wave of improved China internet sentiment. There's something specific to Xunlei driving this.
Exactly. It highlights Xunlei's specific catalysts and growth drivers, what we sometimes call idiosyncratic alpha. They're really standing out even as the broader sector sees some, albeit uneven, improvement. That kind of outperformance likely gets noticed.
I bet. Nearly triple the return of the sector ETF over a year. So let's talk about the resources they have to keep this going. The balance sheet.
Looks pretty robust. As of June 30th, they had $275.6 million in cash and short-term investments.
Okay, a solid cushion. Allows for continued investment.
Yes, absolutely. Crucial for continuing the Hoopoo integration, investing in product, content, creator tools, advertising tech, all that stuff needed for expansion.
Now, you mentioned earlier the different profit profiles of the segments. Subscription is profitable, but the others.
Right. It's important to remember that while the subscription business contributes positively to operating income, the live streaming and cloud computing segments are still technically loss-making at the operating level. They're in heavy investment mode.
Okay, investing for growth, accepting losses now for future scale.
Exactly. However, it's worth noting that Hoopoo itself, in that first month of June, actually made a positive contribution to the bottom line.
That's interesting. So the acquired asset is already profitable, even if the broader segment isn't yet.
Seems so. Management actually highlighted that they expect Hoopoo to make positive contributions to the company's total performance on a yearly basis going forward. That's a promising early sign.
Definitely something to watch.
Yeah.
So thinking about future catalysts then, what should listeners keep an eye on?
Well, obviously the Q3 results expected around mid-November. That'll be the next big data point. We'll want to see if that strong sequential guidance plays out.
And specifically within that, looking for more detail on Hoopoo.
Yeah, looking for measurable KPIs from Hoopoo, things like traffic growth, maybe advertising ARPU, average revenue per user. Also, any updates on new cloud customer wins, maybe pricing strategies there. And of course, any news on what they plan to do with that Insta360 stake eventually, or how the accounting continues to flow through.
Lots to track. Okay, well, for our seasoned investors tuning in, you know what time it is. It's our This Is Not Financial Advice segment. Just a thought experiment, purely educational, not a recommendation.
Right. Disclaimer firmly in place. So here's a thought, playing off what we've discussed. Given Xunlei's really strong outperformance versus peers, the boost from Hoopoo integration, and that financial flexibility from the Insta360 gain, you could consider a theoretical long position on XNET.
Okay, long XNET,
Paired simultaneously with a short position. Not on the whole sector, maybe, but on a basket of smaller, less diversified Chinese streaming or content platforms. The ones that maybe like Xunlei's strategic depth, the multiple growth engines, or that Insta360-like financial cushion.
Interesting. So the thesis is basically Xunlei's unique strengths will let it keep winning.
Exactly. While smaller, maybe more fragmented players might struggle to keep pace, find funding, or compete effectively. Xunlei, with its core business, the Hoopoo asset, the cloud segment, seems positioned to potentially consolidate market share or attract more capital.
So it's a pair trade. Long XNet, short a basket of weaker peers, aiming to capture that divergence.
Precisely. You're trying to capitalize on both Xunlei's specific strengths, its alpha, and maybe a broader trend of consolidation or divergence in the sector. Again, purely a thought experiment based on the Q2 trends.
Understood. Okay, let's wrap this up then. In summary, Xunlei's Q2 2025. Strong, broad-based revenue growth.
Definitely. Significantly driven by that Hoopoo integration kicking in, plus healthy performance in subscriptions and cloud.
And that huge non-cash gain from the Arashi Vision IPO Insta360 adds a layer of financial strength. Strategic validation gives them that war chest.
Right. And the Q3 guidance signals they expect the positive momentum to continue. It feels like a company that's executing well strategically right now.
Yeah, seeing the results of those strategic moves.
Absolutely. But as always, remember, this information is just for educational purposes. It is definitely not financial advice.
Please do your own comprehensive due diligence before making any investment decisions. The landscape is always changing.
Couldn't agree more. Understanding the details, the risks, the context, that's crucial.
Well, that's it for this deep dive into Xunlei's latest earnings. We hope this breakdown gave you some valuable insights, maybe sparked a few new thoughts.
We hope so too.
Don't forget to subscribe for more deep dives into the financial stories shaping the markets. And let us know what you think or what you'd like us to unpack next time. Thanks for listening.